Hello, everybody. I think we're slowly getting people joining, and I just wanted to welcome everybody. Format today is if you have any questions, please do enter them in the Q&A box. This is a Zoom webinar, and it is being recorded. I would welcome Paul and Bill to turn on their cameras and join us for the presentation. We will start with Bill Sheriff, and I will just stop share for a moment and bring up the presentation. Bill, are you there and can you hear us?
I am indeed.
Excellent. I am just going to bring the screen back up to the beginning, and Paul Goranson will follow Bill's introduction to the Alta Mesa acquisition. Thank you, Bill.
Thank you, Janet. Thank you, Paul, for joining as well. I'm going to give you a little introduction here and build up to the transaction and a bit of background on the company. Most of you are probably aware, but enCore Energy is one of the leading newcomers in the ISR space. We've got a depth of talent that spent many, many decades in ISR, in-situ recovery of uranium. And the company is built around a sound strategy of production that'll be based in our operational area of Texas, where we already have two fully licensed plants, the Rosita and Kingsville. Rosita, as you're probably aware, has gone through extensive renovations in the last year and is now ready for operations. The well field at Rosita is currently being installed after successfully putting in the monitor wells around the target ore body. We've got a very clear-cut pathway production, and as you know, we've built most of the company on mergers and acquisitions, having completed two major acquisitions in the last 2 years. And we certainly look for those sort of transactions, as I've often stated during the last year, as any transaction has to be, first off, in the ISR space, it has to be a production-oriented asset, and it has to be accretive on at least one major category, and that being in terms of either our production timeline, our production profile in terms of capacity, or in terms of adding significant low-cost pounds to our production profile. And this acquisition was unique, especially unique in that not only is it in our main area of operations in Texas, but it checked all three boxes. And indeed, it checked a fourth one, being accretive on an NAV valuation basis to the company. So it was really an ideal transaction for us. It was a win-win transaction for Energy Fuels as they concentrate on their core business of being the U.S.'s only conventional miner, when we're looking, of course, exclusively at the in-situ recovery. So it really was an ideal transaction for the two companies. A little bit of a market cap summary. This slide is somewhat out of date. 107 million is the correct number of issued shares. We just announced in association with the acquisition a $69 million bought deal offering with Canaccord as the lead underwriter. So that'll take us to 130 million shares outstanding. Indeed, obviously, the cash position will change rather dramatically with the vast majority of that headed towards the completion and closing of this acquisition, which is anticipated before year end. As you know, our directors, you probably know these folks quite well by now, but a real depth of experience in terms of in situ, all the way from being one of the initial co-inventors with Dennis to Paul having built, I think, 3 of the last ISR plants in the U.S. and extensive uranium experience with other members of our board. For those of you that haven't heard about or really read in detail, Susan Hoxie-Key's background is our newest director. She's spent her career largely at the Southern Company as a nuclear engineer in charge of fuel procurement as well as fuel bundle design. So having that customer's perspective on our board is certainly important. Just to refresh your memory of the in-situ process, we basically inject oxygenated groundwater into the uranium-bearing sandstone, which basically reverses the redox reaction. The uranium goes into solution just as salt would go into salt water. And that's pumped to the surface where the uranium's recovered. the water is refortified with oxygen, and the process goes over and over again. The Alta Mesa transaction, as I mentioned, is quite transformational for us. The grade's good, the pounds are good, the plant is fully permitted and ready to go. So I'm going to turn it over to Paul to discuss the details. After all, he built this plant when it was first constructed and knows it inside and out. Paul?
Thanks, Bill. Yeah, the Alta Mesa project is more than just a plant. It's a large holding with significant mineral resources attached to it. So let's get to the start of the deal. As we announced on Monday, we entered to an agreement to acquire this property for a total amount consideration of $120 million. $60 million will be delivered in cash at closing, which, as Bill mentioned, part of the recent financing we announced is a significant portion of that. And then the balance is going to be financed by Energy Fuels as a secured vendor take-back mortgage. And it has an 8% coupon attached to it, and it is a convertible debt that has a 20% premium, and on actually a 10-day VWAP at closing. The term is 2 years, and Energy Fuels will be limited to some resale and standstill provisions. When we close on this, we intend to begin right away begin developing it. Just a little bit about the mineral resource. This is out of a recent technical report that was issued by Energy Fuels. Right now, M&I resources are 3.4 million pounds, and inferred resources are 16.8 million pounds, which is a sizable mineral endowment that comes with us. But we believe that there's, and I'll talk more in detail about it later, that there's significant upside to these numbers, in addition to a very fast track to be able to convert inferred to measured indicated resources. So Janet, next. More detail about the plant, the operation, et cetera. It's located in South Texas, approximately, the physical facility is approximately 50 miles from the Mexican border. It's from our current locations where we operate, we have the Rosita and Kingsville Dome plant. Both are relatively close in distance. As the crow flies, actually road miles, crow flies are a little closer. This is our third licensed facility we're acquiring. As if you all recall, when we closed on the Westwater transaction, we had 2 licensed facilities that came with it. And we've been spending quite a bit of effort on upgrading the Rosita plant. We'll be acquiring a third one here. And this is a plant that has a significant capacity addition to us. As it's built right now, the ion exchange capacity is roughly 1.5 million pounds a year, but also has a 2 million pound resin processing, elution, precipitation, and drying capacity. So when you add that to our current capacity at Rosita and Kingsville of 1.6 million, that's 3.6 million pounds combined capacity a year, which is effectively has doubled our capacity without having to go build additional resources. In addition to the mineral resources, of those, there's some that are immediately ready to go into production. I'll get into that in a moment. But with this couple it's not just the plant itself and the mineral properties directly associated with the plant. We also have access to 190,000 or 200,000 acres of private land. It's all contiguous. It's all one mineral owner, and so it's pretty well established, and the land cost and the royalty costs are very amenable in today's markets. The plant itself is in a fairly good shape for a restart. There's a little bit of work that has to be done, but not as much. And we'll be bringing it up in stages. There's 3 portions of the ion exchange facility, and we'll be bringing those in sequentially to maximum capacity. And as Bill mentioned, we're 3 of the light constructed licensed facilities in the U.S. Kind of get an idea of scale where this property is located, but also the size of the property. You can see on the map, we've got our Upper Spring Creek, Rosita processing facility where we recently announced completion of the plant work, and the Kingsville Dome processing facility, which is currently on standby. In relation to our other development projects to the north, Upper Spring Creek and Butler Ranch, you can see those in relation to the Alta Mesa project, which is located south of our current operating area. But as you can see, the property is fairly large. And in some cases, the northern end of the orange area, which is the property, is closer to Rosita and Kingsville than the Alta Mesa plant, which by road miles, which provides some interesting value-added options with respect to our additional capacity across the property. It's fully licensed with the Tex and currently has a well field that's fully permitted ahead of it. I do have history with this project. I was it was previously owned by Mustangen Uranium, which is a private company. So that's why if you don't know much about this property when it was operating, that's because it was a private company. And when we started this project up in 2005, or actually full production in 2006, we were selling directly into the spot market. But and during that period of time, we were able to leverage the production off this site to increase the uranium price through auctions. And at one point, actually, some of the production was sold at $133 a pound. And that gave the opportunity, that type of cash flow provided a lot of opportunities for the asset. And we were able to, when I was associated with Mustangen, we were able to grow the project from simply being focused on if you look on that map at the very far right, low right-hand corner where that red is, to an area about that size, to expanding the mineral resource over across a property of 200,000 acres as a result of that. And identified significant mineral resources. And we, as you see on the slide here, we have 6 mineral resource areas that go into those resources I described in the technical report. And but probably the one thing that's not known or discussed much in that technical report, it only scratches the surface, what I believe, in my personal opinion, is the upside that this project has. It's in the heart of the uranium district in Texas. You can see where our properties lay out. It's just kind of right along trend. And you've got it's like having a very significant kind of area captured on trend. And we proved that through our, back in 06 to 08, our exploration program. Next. Oh, okay. So this project operated from 2006 to 2013, produced 4.6 million pounds. So within that roughly 6-year period window or 7-year window of time, it was a leading producer. 3 of those years, it constituted 25% of the domestic production coming from the United States. And the only projects that we hear about, a lot of these projects from our peer group. But you can see its history is it's number 3 in the cumulative production. The only 2 projects that are ahead of it are Cameco's projects at Smith Ranch Highland and Crow Butte. And we have to keep in mind those operated all the way from 2000 to 2016. So they had a long life during that period of time. So you can see the project is a key part of the production. When we look at production profile for the U.S., this can be a key component in restoring, in addition to work we're doing in South Texas, restoring production throughout the U.S. Here's our production pipeline. You can see from the map, we have projects spread across the Mountain West. From the north at Dewey Burdock, which is a key project for us, Gas Hills in the central Wyoming, our New Mexico assets where we believe we have a large storehouse of value, all the way down to South Texas. You can see that we have a pretty diverse set of operations and properties. And the reason why this pipeline graphic is important to show you is that we're not losing focus on all our projects, or as we've stated all along, we're leveraging our position in Texas, our license capacity to get into production right away. And Alta Mesa brings in an expansion of that capacity, not displacing any of the capacity or plans we have. It just brings an additional size to it and opens it up. And when we talk about a growing uranium market, and as we've been listening to or paying attention to what's going on in the market overall, as there's a strong desire to by utilities and also governments to bring uranium production back or focus on North American and Western supply lines, you can see that this is a key part of that structure, and enCore has a role to play, a key role in that, and we're leveraging our South Texas operations to kick that off while we're completing the permitting, the appeals process and permitting work for Dewey Burdock. It remains a key part of our production pipeline. And then Wyoming as well, as we're starting the permitting work in Wyoming. None of that's being set aside for Alta Mesa. We were able to leverage our assets that we have right now, working at Rosita, completing the well field, and then putting that, then when Alta Mesa gets started, when we close on Alta Mesa, we'll be able to immediately move assets over there. And this is where we're at right now at Rosita. We're still focusing on that timeline, 2023 production. And we're on track for that. We're in the process of, we recently put out a press release at the start of November about us completing the work at the plant, but also talked about finishing the commissioning and getting the wellfield production area authorization in place so we can start injection operations. And we expect to have that in 2023. And that'll kick us off in the production and immediately followed by Alta Mesa and then our Upper Spring Creek. So kind of creating this critical mass in South Texas of production, which we're going to be able to leverage our other projects elsewhere. Texas is an important place for us to start. It's got the regulatory environment is focused on development and business. The state government and the local communities are supportive of what we're doing as they see economic development being a key part. All of our operations we have that I've just described are located in some of the areas where there's the economic activities dropped off, and this is seen as a real leverage. And so we are excited to be doing this. Texas is a great place to do business. One of the things that came out in 2013 was a study by the USGS estimating over 200 million pounds of additional unknown or unidentified economic uranium resources. When I showed you that, when we looked at that graphic of the area covered by the property associated with the Alta Mesa project, it is in the heart of that study area the USGS did. And if you took the area of it's roughly 20 to 25% of the area, they put in their projection for estimating those resources. So that's why when we talk about the exploration potential and then the mineral resource potential at Alta Mesa, I think that there's a bigger story there that we'll be talking about in the future as we continue to advance the project. And Janet, I'm ready to turn it back over to you.
Okay, thanks very much, Paul. And thanks, everybody. We've received a few questions, and I'm going to hopefully assign them to the right person with Bill and Paul both back online. And actually, I think the first question I'm going to ask is tied to the conversation you were just ending, Paul. The question is, you've mentioned in the past that enCore is a producer, not an explorer, yet a significant part of this project's upside is tied to exploration. How do you address that dynamic? I think you were actually doing that, so I'll let you continue.
Sure. Well, yeah, that is a good question. When the greenfield exploration for this project is done, and that's what created a technical report. So now it's taking those resources and putting them into measured indicated resources and then bringing those in as a project. We have the ability with our current the lease option we have the ability to lease these into mining leases and then get them permitted as amendments to the existing license. So it's all part of although we're talking about exploration potential and everything else, it's all part of a larger extended production pipeline in Texas that this land package provides us the ability to have a longer extended production pipeline. And again, it's going to take some drilling, and we'll call it exploration, but it may be probably better characterized as advanced exploration work rather than greenfield. I think it fits right within our total production plans. It's what gives us the longevity in South Texas into going from a 10-year to 15-year production window to a 20 to 30-year continuous production window.
Yeah, I see it as very similar to what you're doing at Rosita, where you're constantly looking to expand your production potential at the plant through enhanced drilling. Am I correct?
Yes.
Okay.
That's right.
Okay. I might add to that, Janet, if I could interrupt. It's in a more traditional sense, it's brownfields exploration. The hard work has been done, and one of the bullet points there that audience may have missed is there's 52 miles of roll front identified, and only a small portion of that's actually been drilled into the resource state. The way uranium occurs along roll fronts is essentially the target and the mineralized horizon has been identified and verified. It's a matter of more intense, closer space drilling to bring it into the resource state. So, it should not be considered, greenfields exploration, as Paul had mentioned, but rather highly targeted and delineated drilling.
Yeah, right.
Excellent, thank you. Bill, while you're speaking, maybe I'll just put this question out to you. There's a question about what the package of properties looks like in comparison to what you had when you were with Energy Metals. My understanding, Alta Mesa was not part of that package, so this is an enhancement, but maybe just a little clarity for people.
No, in fact, none of our current projects, other than a small amount of the New Mexico, were in our portfolio at Energy Metals. Energy Metals was it was several years from reaching the point we are now. Our processing plants built, renovated, two of them essentially ready to go, Rosita now, and with a very small amount of upkeep, Alta Mesa. The production size is substantial. Having permitted resources ready to go puts us way ahead of where we were in 2007 in Energy Metals. So really there's no comparison other than the market awareness of uranium now, where people ask where we are in the uranium game, and I still say we're in the warm-ups. We haven't even started the game. Whereas in 2007, the uranium cycle was at its peak or nearing its peak. So aside from the market, positioning in the market awareness, there's really no comparison. We're considerably further advanced with enCore than we ever were at Energy Metals.
Thank you. My understanding is that you see the path forward in uranium now to be more of a production story than a pounds in the ground. Paul, the next one is, sorry, Bill, go ahead.
I was going to say that's right. That's exactly right.
Okay. Paul, this one is for you. Given the spare dryer capacity at Alta Mesa, you mentioned in the past that you could expand Rosita. Would a new dryer, and I'm thinking this is at Alta Mesa, double capacity. So maybe talk a little bit about the ability to expand capacity without the need for amending permits.
Yeah, so at Alta Mesa, the original drying capacity was limited to 1 million pounds a year. Now it's through throughput. The license only allowed one dryer to operate. In 2008, the license was amended to have 2 dryers operating, and brought that capacity up to 2 million pounds per year. And both those dryers have operated, so they're already quote unquote broke in. At Rosita and Kingsville, we actually have spare capacity, not necessarily capacity, but we have the ability to add additional drying capacity into the structures because they're already licensed for the additional capacity. It's just a matter of spending the capital to put the additional drying capacity at Rosita. And in fact, we're actually in the process of identifying equipment and potentially putting that into a procurement plan to basically put in our back pocket for expanded capacity down the road. The good thing is that we, with both of our operations, Alta Mesa plus our existing South Texas operations, we're going to get a tremendous amount of flexibility with respect to being able to process uranium-loaded resins from various projects within our project property portfolio. So it's, I think we'll be adding capacity as we need to. This is right now this is really a boost in that, and gives us a lot more upside on opportunity and flexibility.
Thank you. I'm going to pass this one back to you, Paul, again. Valuation for the asset of Alta Mesa, 120 million. enCore had it valued higher. Energy Fuels many years ago paid less for it. Mind you, the uranium market was quite different then. Can you speak to the asset valuation?
Yeah, so that's a question that I expect to come up quite a bit, particularly when the Energy Fuels paid significantly less than what we're paying for it. The real valuation is in the fact that I think that it's actually undervalued. We're getting it for a good price. As Bill mentioned, instead it's a win-win for both of us. To go and replace this, it would be much more expensive to get the property position, and also the existing infrastructure, et cetera. And the valuation, I believe, is a fair valuation that we gave, the offer we gave them. It was based on where it sat within Energy Fuels' asset NAV book, and we think that we both came to a conclusion that it was a fair price to pay. And I believe that when as you mentioned, Janet, that the enCore valuation was significantly higher, I believe that the higher valuation is the real value. When I look at it from my perspective, that's why when Bill talks about it being accretive, it is, in our opinion, it is accretive on the value itself, because we can unlock that value quickly, whereas if it sat idle for quite some time, that value begins to diminish. And our point is to unlock the value and demonstrate that the net asset, the value we're paying for it is well below the net asset total, the life of mine net asset value.
Thanks, Paul. I know, Bill, you probably want to add something in here. You're on mute right now, but if you want to take yourself off, because I know there's in addition to the valuation, there's also questions about the competitive process. So maybe, Bill, did you want to add anything?
Yeah, I think, Paul probably underscored the vast majority of that, but just to reiterate a bit, we were in a completely different environment in the middle of the last decade when Energy Fuels purchased this. And, I dare say most of our investors, with one or two names I see on the list, were probably not investors at that time, nor interested in uranium. We just were in the midst of a decade of darkness, as I call it, after Fukushima and before the realization that this is the future for green energy. So it was a completely different time. And obviously we're looking at a different uranium price, but I think outside of that, Paul probably covered it really very thoroughly. And obviously the synergies with our existing main operations, within 100-mile radius of each other in Texas is certainly an advantage that Paul touched on in terms of being able to actually, produce on this opportunity.
Okay, thank you, Bill. While you're on, Bill, there is a question about the public listing. And if you could speak to the matter, that would be appreciated.
Sure, I'd be glad to. As you know, we've made application to list on at least one exchange in the U.S., Senior Exchange. We had achieved the minimum pricing, but right after that, as you may be aware of, especially if you're a broad market player, the market fell rather precipitously, and along with the general market, obviously you get some liquidation in the uranium sector as well. We weren't alone or immune from that. And so while our application is active, we've met all the requirements. Basically, we're told that it's pending. It's a bit of a bureaucratic issue at this point, but I am still quite confident that we'll see that happen before the end of the year.
Thank you, Bill. Paul, there's a couple of questions we got, and I let everybody know there's a number of questions, so I'm trying my best to manage them. About the number of pounds that you have under contract, pricing, floors and ceiling. Could you speak to what percentage of the production is covered by contracts? And maybe I'll just leave that generally, let you speak to that issue.
Sure. We have approximately just under 3 million pounds contracted right now in offtake. 2 million of that is strictly a spot price offtake agreement, where basically whatever the spot price is at the time we make a delivery is what we get paid. And the other two are with our nuclear utility ones. They do have a ceiling. I can't go into details on the ceilings and floors, but they have ceilings and floors attached, and they are you know, the ceilings are certainly well above market today. And we're seeing more of an appetite that from utilities to follow similar trends. But right now, that's our commitment right now. Is if you were to watch our production profile compared to our offtake agreements, you'll see we're 100% committed probably for the first 2 years, and it drops off rapidly after year 3 as we increase our production coming out now with Alta Mesa producing. Drops back down to roughly 50% of total plant production capacity, and so it follows that's, you know, where we don't want to be fully covered under contracts, simply because it provides, you know, that way we have flexibility to be able to deliver, maintain inventories and value, but we have that roughly, you know, our ultimate goal is to have roughly between 30 and 50% of our production is committed to offtake. And that is to have a committed buyer in the market to maintain cash and provide through committed buying, and then have the ability to work within the spot market, et cetera, or else provide other opportunities, market opportunities with inventory that we have accumulated. And have a good cash flow to support our ongoing activities. So that's kind of where we're at. You know, I can't go into details on the offtake agreements themselves, outside of the fact that they're all market. Right now, everything we have is market related. We have 3 agreements in place, and I expect I don't see any utility signing any kind of like base escalated contracting right now, at least not in the pricing that I would see that we would want to do base escalating. But market pricing is good, and having committed buyers is very good, because if you follow the spot market, there are times when it becomes very illiquid when there's no buyers, and so having committed buyers is really important, and getting market price is important for our shareholders as well for revenue.
Thank you, Paul. Well, you're still with your mic on, another question that I think you should handle, and I know at Rosita, you had a little bit of a delay with the pumps, and that was resolved. But there's some questions pertaining to a few about supply chain issues, parts, capacity for drilling, capacity for taking on the number of projects you have. And maybe you can speak to the capacity at enCore, but also the any issues you see going forward with supply chains, et cetera.
Thanks. So we did experience some supply chain delays on numerous components, ranging from chemical and transfer and booster pumps in the plant to well casing in the well field. we were able to manage those. It took a little bit of, put a little bit of extension on time where we expect things to be delivered. But we were able to manage those because we're so far ahead of when we actually had the absolute need for it. The situation at Alta Mesa is not going to be too dissimilar. We'll be doing pre-planning. So in fact, prior to closing, we'll be doing an assessment on what equipment we need, and even take some risk by doing pre-purchasing of equipment that we may need for to get it into production ready. And so we're doing that assessment at the moment. We'll be doing some site visits to get a tally on things. One good thing is Energy Fuels has a good record of their equipment, and we're able to leverage off of that. With respect to drilling, when we started drilling back in November of last year, we could only find one operable drill rig. We're currently with Rosita and Upper Spring Creek. We have six drill rigs operating, and they're actually doing they're really top notch. And with the option to add another 3, which I've held off on that option until we're able to announce this the Alta Mesa transaction. So within the first quarter, we'll be up in 2023. We'll be up to 9 drill rigs. And as you begin to develop and operate it, the ability to bring in additional drilling capacity, particularly quality drilling capacity, goes up. Where we're seeing, obviously people are always an issue. We haven't had no real issues hiring people except for really skilled technical positions, and that's because they're in demand all over. But we've been able to find some quality people. And a good example, kind of how we want to manage these assets, and when I say assets, that's people, drilling rigs, and even equipment, is that we're going to finish up our wellfield drilling at Rosita, putting in all the patterns in at Rosita by the end of the year. From there, we'll be able to, once the project we close on the Alta Mesa deal, those assets will be moving over to Alta Mesa to start installing wellfield at that point. Our geologic team will shift their focus over there, and we'll have also completed our resource development drilling at our Upper Spring Creek project by the end of the year as well. And so all those assets will be ready to move over to Alta Mesa, while we're also, and then at that point, we'll be putting in all the surface infrastructure at Rosita, at the wellfield and the satellite ion exchange plant for startup in 2023. And then obviously those assets, as we begin to build up our workforce, will be adding experience. We already have a good core group of experienced foremen and craft skills, whether it's welders and instrumentation, electricians. We're adding that capacity today for Rosita. We'll be able to leverage that for Alta Mesa as well. And we'll continue to do that as we continue to expand our operations in South Texas and ultimately to other projects up north. And but this is not my first rodeo. When I built Alta Mesa in 2005, I was hired in 2004 as employee number 1, and I had to build a workforce. So I'm using the same path I use for that right now for enCore. And I see that model applying when we bring in the additional properties associated with Alta Mesa as well.
Thank you, Paul. We're going to give you a break and get a few questions to Bill. When we come back, there's a number of questions about the cost of Texas pounds we're going to put to you. But first, we're going to let Bill have some fun. About the confidence level amongst investors due to the company's share price. A question that person feels that it enCore underperforms relative to its peers. And so Bill, this one's going to be for you to answer. And when you answer it, could you also speak to the question about why management isn't buying at these prices? And has management considered open market purchases to boost the confidence? And you're on mute,
yes.
Bill.
Thank you for that question. I think you've got to really look at the fundamental goal and objective of the company, and that is to get into production. So, as opposed to a lot of promotional expenditures, et cetera, we have focused entirely on production. In terms of insider participation and buying, this transaction has been underway in terms of negotiation and many other aspects of it for 6 months. So, therefore, quite frankly, a number of us have been restricted. But at the same time, I think clearly an earlier question focused on the listing, and I think there was some disappointment over that, understandably so. As I say, it's a bit out of our hands, and we do expect that to be resolved. But our company focus clearly being on production, we really don't see that purchasing our shares in the open market is a good use of corporate capital at this point. We've got a very aggressive build-out schedule, and one that we intend to execute on, and hopefully that answered your question.
Yes, I think there was a question about open market purchases. Do you feel that you've answered that one sufficiently?
Clearly, that was answered in that the company's best use of capital is not to enter the market to buy its own shares back at an undervalued level, granted, but rather to employ those cash resources towards our stated and kept to goal of production. We'll be certainly the first in line for production as it stands now, and certainly going to execute on the timeframes that we've given the market.
Thanks, Bill. We have a question about other assets in the company. Recently, that was announced that enCore was spinning out some assets to Nuclear Fuels, a private company with intentions to go public, and they'll own just under 20%. Also own about 30% of Group 11, which is a private company looking at using your expertise in in-situ recovery to extract gold. And Bill, there's a request for an update on what's happening at Group 11.
I'd be glad to address that. Group 11 is obviously suffering some of the funding malaise that's affecting the entire junior gold sector, because it is tied directly to new innovations in mining and the in-situ recovery, which would be revolutionary and conceivably could change the entire mining industry. It's still viewed very much in the gold sector, and as a result, funding is dried up to a certain degree that we don't feel the need to go and push that envelope. And we had a bit of delays on a drilling program in Wyoming based on regulatory approvals, which came through just in time for winter. So we've put that drilling off until spring or summer in Wyoming, and weather conditions allow. As for the general practice, anything that's not a core asset, that is anything that's not in our production profile, is certainly we attempt to monetize it through transactions such as our earlier one with American Future Fuel, where we're still a very large shareholder, as well as more recently with Nuclear Fuels. There will be more of these to come. I would point out that most of these assets that are vended out don't even make our website. And the one exception to that being the KC project that was vended in. It was generated internally through staking acquisition. And that's one we do have a clawback on, because it has a significant potential. But that potential is going to need $20 or $30 million of grassroots or green fields exploration before it could be even considered to be dropped into the pipeline. So while we have a healthy respect for that property and want to remain involved, we'd just not, here again, it goes back to the priority of funding. You can't do everything, and our funds are allocated towards our clear stated goal of production. So it's the non-core program is important. It beefs up our balance sheet. It does provide potential opportunities for us down the road, as I just mentioned on the KC project. But these are assets that are not generating any return for the company, and they're put into better hands through the various means that we've discussed.
Thank you, Bill. Appreciate the fact that it's management's job to create value for the shareholders from your activities. But the number one question is the cost of Texas pounds. Paul, you're on mute. Perfect.
I found a mute button. You're right. And so cost of Texas pounds are, obviously everything varies, but depending on grade and everything else. But typically, well, I'll say that our expected costs in South Texas will be, our cash costs will be, when we're in full production, sub 20. I don't have any hard numbers. And then all-in sustaining cost will be either in the low 30s, because we do, in that all-in sustaining cost, we add in reclamation accruals as well into that. So that's kind of the range, since I kind of have to do a little bit of arm waving because we haven't published anything, and that, so that we I kind of have to generally base it on experience. So far, with respect to the drilling costs and everything is within my expectations of where they should be. Costs have gone up, but not to the point where we're uneconomic. We still remain very economic as far as current spot prices go, and so as a result, I feel very confident we've got low cost. That's why we're moving into production. If we, when others say that they're waiting for right market conditions, and have been saying for a long time, but we need a $50 price. Now the price is 50, and we don't see new production coming on. We made our decision back when we had when the price is in the 40s to go into production. So I think that hopefully that helps address kind of the question more, maybe indirectly, but without specifics, but gives you an idea where we see our expectations to be.
Great, thank you, Paul. And I know that there'll be more information coming out as the transaction closes, and enCore spends more time on site looking at the next steps, and we'll be putting out information on that as we can. I'll let Bill have the last question. There are 11, and I apologize, there's a lot of questions, so if we didn't answer your question, we will be in touch. Bill, there are 11 US production sites. 2 years ago, enCore had none of them, I believe, and now has 3. So when, and this is arm waving, I appreciate that, when do you see enCore being the largest producer of US uranium pounds?
Well, obviously that's our goal, but there are other owners of other plants, and we've certainly got a pretty healthy pipeline of work to proceed and execute on now. It's aggressive, but it's certainly achievable. And the real key comes at what price, and this goes back to the opening remarks, fittingly enough, that any sort of acquisition or merger would have to be evaluated upon its being accretive to shareholders. And it has to be accretive in terms of our production, either, again, in terms of our production pipeline, timing-wise, cost-wise, reserve-wise, and obviously we want to be able to work within our net asset value parameters as well. So unless it meets, the hurdle of crossing those boxes to check, we won't be pursuing anything. Obviously, there are things that we'll continue to take a look at, and if a deal that's accretive to our shareholders comes into view, we'll certainly try and nail it down. But when we'll become the largest is certainly a worthy goal, and one that I'm sure we all have in the back of our minds. But foremost in our minds is executing on what we have in front of us, and that'll make us one of the leading companies, if not the leader, in situ extraction in the U.S.
Well, thank you both, Paul and Bill. I don't know if either of you have any additional comments that you'd like to make before we wrap up. There's unanswered questions, but I think I've hit the most popular questions, and we'll follow up. But any additional comments, Paul?
Sure. Well, first of all, thanks for your interest in this. I think that, as I mentioned earlier, that this is a truly a great project that we're acquiring. I may be a bit biased because I've been associated with it for so long, but I believe it's one that enCore is ideally suited to unlock its value. to both the shareholders, but also into the uranium market as well. I think it'll help us. It's going to establish enCore not as just a U.S. producer, but as the leading uranium producer in the U.S. And we obviously we can't meet Cameco's production levels, but I think we'll be one of the leaders in North America as well. And this is a key piece of that puzzle to make that happen.
Perfect. Thank you. Bill, any final comments?
No, to echo Paul's thanks and gratitude for our shareholder base, our longstanding shareholders, and our good, solid, supportive shareholders. We're certainly working on our end to execute and deliver on the promises that are made, and this acquisition will prove to really accelerate those. So we're glad everyone could attend, and as you mentioned, if there are any questions that weren't answered, please feel free to get back to any one of us, and certainly we'd be glad to answer those.
Well, thank you both very much. This presentation is being recorded. The slides and the audio and visual will be available in the link provided. And if you have any further questions that haven't been addressed, or any further questions that come up, info@encoreuranium.com is always available. And you will find us on social media as well as the website. Thank you again to everyone for joining us. And as always, enCore seeks to be open and accountable, and please contact us at any time. Both Paul and Bill welcome direct phone calls and emails as well. Thank you, everybody, and have a wonderful day.